Welcome back. You're watching Markets at Noon on ET Now. Well, Muthoot Capital has delivered its fourth quarter numbers. We have seen a decline in the reported NII and the profitability. Let's explore, more on what went by in Q4. Madhu Alexiouse, the COO of Muthoot Capital, joins us now on the show. Madhu, thank you so much for taking our time to talk to us about your fourth quarter numbers. So we noticed two things. Firstly, that we've seen a bit of a surge in the provisions. The NPA ratios as well have deteriorated a little. I guess all of this is something that has led to, the profitability declining. So, are you seeing asset quality pressures in Q4? And maybe can we expect it to worsen in Q1? Because it's in Q1 when we saw the worst impact of the second wave.
Yeah, thank you for having me on this show. I think we should look last financial year from April till March, what has happened. First 6 months, you are aware that because of lockdown and moratorium and things like that, the markets were down and the disbursements, everything was kind of kept in abeyance. So first 6 months was about connecting with the customer and doing soft collections. And once the moratorium period was over, and then when the customers were reached out, the moratorium effect was allowed in the system. I think after that, from Q3 and Q4, we saw the market improving. So whatever happened in H1, around Q3, Q4, it recovered rapidly. We saw business bouncing back very strongly in Q3 and especially in Q4. Collections bouncing back, let's say about 70-80% of collections bounced back compared to what it used to happen pre-COVID. So Q3, Q4 gave us a huge confidence, and especially as we close the month of March, it gave us a huge confidence that things are bouncing back very strongly, and minus whatever has happened now, and Q1 is going to get closed in next 10 days. I think there are reasons to believe that market would come out very strongly, two-wheeler market would come out very strongly. I think the Q4 trend would continue once the lockdown eases out in Q1. Asset quality related issues are there, but that is presumably so because of the lockdown and, the teams were not able to physically move out into the market. But post lockdown, the last year's experience, Q3, Q4 gives us a lot of confidence that probably this market has learned how to handle the COVID situation and bounce back quickly, reach out to customer and do whatever collections possible. So we are confident that once the lockdown eases, I think things should start bouncing back much faster than what we are expecting.
Okay, Madhu, lots of follow-up questions. Firstly, what sort of recovery did you see in terms of volumes in two-wheeler, in the used car segment as well in Q3, Q4, and how did it get hampered in at least the beginning in April, a little bit in the beginning of May, and since then? I mean, we're already seeing lockdowns being lifted, right, to a very large extent across various parts of India. So, how quick has the recovery been? Quicker than you expected?
Yeah, I would put it in specific terminology that we use in collections. It is about collection efficiencies. Once the moratorium period got over and we came back to market and started doing the collection, it was around 55-60%, which went up to 95-100%. And in the month of March, it was 100+%, which is a very good sign. It also tells that, the majority of the customers are coming back and repaying their installments. The collection depends on the physical movement of people in the market who reach out to the customers. Of course, we have digital capabilities to do the collections. Besides our flagship company, that is Muthoot FinCorp, has got 3,600 plus branches where customer can go and pay. These are all additional benefits that we have, and as a result, that once the physical movement starts, I think then the thing starts bouncing back soon. So until, let's say, for example, May and June, we had restriction in physical movements, all digital collection was happening. So it is not that customers are totally out of market, customers are totally off. It is not like that. It is about the opportunity to physically visit one of our branches or, come out, or our team able to reach to customers and collect that money.
So just in terms of demand, what is the sense you're getting? You think once things reopen, you think the demand will be higher as sales will be higher? Will it be like a pent-up demand that happened last time, or this time the impact was low, so maybe the pent-up may also be lower?
So let me also connect this with how two-wheeler industry behaves. I think we should combine both the pent-up and how two-wheeler industry behaves. Given the Indian population, average two-wheeler sales is 2 crore plus every year, and last year it was about 1.5 crore. So let's say that 1.5 crore would be a base number, which is the bottom of this particular industry. The pent-up demand is one thing, but as we go forward, the capability of public transport system and the social distancing norm that is there, and people focusing on safety in the sense that while they travel, they would focus on safety and maintain that distance from others, and so they may avoid public transport. We feel that on a long-term basis, there would be a upsurge in the demand as far as two-wheeler sales is concerned. We should also keep in mind that, let's say, tier 3, tier 4 centers of this country, rural areas of this country, where public transport is a problem, and also, two-wheeler becomes a business model for a lot of daily wage owners, earners, and small business owners. These people depend on two-wheeler, to do their commuting and things like that. So these are the very sustainable demand that is there as far as two-wheelers are concerned. It is not that for 4-5 months sales does not happen and suddenly customers start pouring into start buying two-wheeler. There's a very good base as far as two-wheeler sales is concerned, two-wheeler demand is concerned. There's a genuine demand that is there. It is about, as I mentioned earlier, that how people are able to physically move and start doing the transaction or start doing searching for a vehicle and shortlisting it and buying it and then getting it financed. So it is about that, and once that is there, I think, and this year, like last year, it was about 1.5. This year we expect it should be 1.75 crore plus. That's the feel that we are getting, minus Q1, and as we get into Q3 with the festive season coming in, and of course, once the colleges and school starts, allowing students to come back to physically have physical classes, I think that also would contribute to the growth. So besides pent up, there's a very genuine sustainable demand in this industry, which should help the growth as we go forward in this particular financial year.
So when we just look at really what's happening as far as the growth is concerned, is liability side an issue now? I mean, since IL&FS, a lot of NBFCs have been facing liability issues. Can you just tell us about the bond market, how things are over there?
See, as far as we are concerned, we actually do not foresee any problem from liability side. I think we have enough credit lines in our lined up for us. And I mentioned about how the collections has improved, over Q3, Q4. So there is enough and more cash available for us. It is about, the demand to pick up. And once the demand picks up, I think, this would be utilized. So as of now, we do not see much of challenge as far as funding is concerned.
All right. Well, Madhu, we leave it at that. Thank you so much for joining us today on ET Now and talking to us about, the Q4 numbers and what the outlook is going forward as well. Okay, on that note, we'll take a short break on the show, but be right back with more.